What's happening? The volatility that we saw in the month of May in the markets is now behind us. The volatility index now turning differently. The Sensex hit an all-time high. The Nifty hit an all-time high. Bank Nifty crossed 50,000. It's doubled in 6 years. Mid-cap stocks at an all-time high. PSU stocks performing very well. And like you said, Adani stocks also now back at the pre-Hindenburg level, and this is a very rare moment in the markets. Fundamentals, technicals and sentiment all turning positive, favorable at the same time. In fact, just to take this question to Abhay. Abhay, what's happening in the markets, and is this a euphoria where we saw the markets open gap up and now some amount of profit booking as well?
Yeah, good morning, Siddharth. Thanks for having me on the show. So, we have been telling our investors for a while now that the election outcome is but a pit stop in India's economic growth story. So they need to look beyond election results. But obviously, when a big event like this comes up, there is some nervousness even with long-term investors. So what we saw, Siddharth, happen over the last month or so is that some of the large investors in India increase their cash allocations, waiting for the results to be out. And we also saw a very large foreign investor build up in short positions through futures to protect their cash market long positions. Now, I think the exit polls have been better than everybody's expectations in the sense that there is clarity and unanimity across all polls that the incumbent government is going to come back. And I think that is driving today's rally. I would see today's rally more as a catch-up rally, Siddharth. Though we are up about 2.5-3%, but it's still not euphoric. I don't call it euphoria zone at all. I think it's more of a catch-up where shorts are getting covered, and some of the investors who were under allocated running in to deploy their cash. I think we are far away from a euphoria zone. Profit taking will kick in, but I think these levels will sustain, and at least for a week or so till people recalibrate their positions and then start looking beyond at what the budget will be and what government's economic policy direction will be. So I expect the markets to hold.
Abhay, you are sort of raising expectations even further by saying that we are still not in euphoric zone, and when you are in euphoria, caution is always warranted. But just one quick point. Who is buying at this point of time? Because we've seen this play between the way foreign investors were cautious and domestic investors, including retail and high net worth individuals, doubling down on Modi guarantee.
I think, Siddharth, to answer your question, everybody is buying right now. I don't see anybody selling. And that's one of the reasons of, for the spike in the market, that people who had full faith were fully invested. They don't want to sell right now. As I said, there will be profit taking, but I don't think this is the time that profit taking will kick in only with a 3% increase in Nifty levels. You look at it, Hang Seng is up almost 3% today. Nobody really cares. So if Nifty is up 3% today after such a big outcome, I don't think anybody is starting to book profits unless they are traders. So who's buying? The retail investors are buying, the HNIs are buying, the mutual funds who were sitting on cash, they are buying, FPI is definitely buying. So when you have sustained buying from all these 4 quarters, that's what is driving my faith that the markets will not only hold but will progress further on from here. I think a very strong base at around 22,500 levels, which should hold with better monsoons on the horizon, probability of interest rate cuts, good economic growth numbers, GST collections, every which way you look at it, no fiscal pressure on the government. So that is what is driving my faith that the Nifty earnings numbers will get re-rated upwards.
Siddharth, I also want to ask you, what really drives this? Is this the sense of continuity in governance that puts the kind of faith?
Absolutely. No negative surprises.
Yes.
Prime Minister Modi's approach towards the economy and the markets, and some bits of that being highlighted in an article today also, which has now been made public.
Yes.
It's very clear that the markets love continuity. They don't want any negative surprise.
No changes.
So what will happen? Infrastructure spending will continue. The welfare support will continue. There will, obviously, the BJP manifesto did not promise any giveaways, so that will continue. Things like the return to the old pension scheme. Remember, at the state election, that was a big issue. Himachal, we saw that happen. That will not happen. We've seen what is happening as far as Karnataka is concerned, and the metro project there, putting pressure, the free rides for women. All of that put pressure and create uncertainty, and investors don't like that. And remember, the Indian market is fundamentally different from what it was when the 2014 election results came, even the 2019 results. There are millions of retail investors in the market. They are smaller, but they are driven by sentiment. And in some ways, the Atmanirbhar stock market story, and I've been saying this for the last 2 days, I think that is the key play here. People are betting on the future, on an aspirational India. And when they do that, Abhay knows this, caution is always certainly warranted.
That's right, essentially, and expect this to continue, this cheer to continue at least for a couple of days?
Absolutely. Yes. Cautious optimism would perhaps be the best way to describe the current situation.
Right. In fact, cautious optimism, and I'm looking at Twitter and it's going crazy over the markets. It's full of memes talking about how this was but expected, isn't it, Siddharth?
Absolutely. And what will, if we were to go into some of the deeper elements. Abhay, if we still have Abhay with us, just
yes.
A quick question. Abhay, is this sort of rally going to extend beyond the modified stocks, so to say, the PSU bank counter, the defense counter, the infrastructure space? Any thoughts on what sectors will be in favor with investors?
No, I think that's a very good point, Siddharth, because we internally for our fund with our research team, we keep discussing that look, where is leadership going to come for the next leg of rally? And we see leadership changes take place. I think what we are looking at are some core sectors like cement, which hasn't performed for a very long period of time. But recently there was a government statement that the capex will be further increased. The government capex will be further increased by 10%. Plus private capex kicking in, I think will augur very well for cement stock, cement industry, because it's a highly consolidated industry. Secondly, we are looking at non-ferrous metals. I think there is a global rally that is starting to play out. So I think that is another sector with large cap stocks that we think will pick up, from here on. FMCG stocks haven't really done anything, but with rural income picking up, I think that is another sector that will start to take lead. So I think some of these sectors which have gone through sideways time correction, very good companies, investors will start looking to value buy in them, and I think these are the sectors that will start taking the lead from here on. So that's our bet at the fund level.
Fair point, Abhay, and thank you very much for your time with us. One quick point, the PSU shares have jumped to fresh highs, and this is directly connected with the government's policy priorities that we have been seeing. Power sector stocks, we are looking at PSU bank stocks, and in fact PSU bank stocks have raced ahead of their private bank counterparts. So all in all, it telling us that as far as the markets are concerned, those stocks that are heavily influenced by the central government's expenditure and its economic agenda have risen sharply and will perhaps continue to do so if the exit poll results were to hold true come Tuesday.